Hey there, seasoned Forex traders, and welcome back. Today, we're challenging a fundamental pillar of trading education that many have accepted without question: the stop loss. Every mentor, every textbook, and every online course has drilled into us the cardinal rule of cutting your losses. The stop loss order is presented as the ultimate safety net, the one tool that stands between a minor setback and a complete account wipeout. But what if the very thing designed to protect you is actually a well-known vulnerability? A predictable weak spot that professional traders and automated systems are actively exploiting? What if the stop loss isn't a safety net at all, but a slow, methodical leak that guarantees your trading account will eventually run dry? Stick with us, because this might be the most paradigm-shifting video you watch about currency trading this year. Let's dive deep into the fatal flaw of the conventional stop loss. You enter a buy trade on Euro-USD, convinced the price is headed up. You place your stop loss just below a key support level, a logical point where the market shouldn't go. But the Forex market is not always logical. It's a vast, interconnected network where liquidity providers and large institutional banks see a global map of every clustered stop loss order. Think of it as a feeding frenzy. They can use high-volume trades to drive the price down with a surgical strike, a lightning-fast fake-out or whiplash that sweeps through the market. Your stop loss is hit, your position is closed, and you're left with a fresh loss on your trading history. Moments later, the price snaps back and soars in the direction you originally predicted. And it's not just stop hunting. The natural forces of market spread and slippage can also trigger your stop loss on a volatile spike, even if the price doesn't technically reach your intended level. It's a rigged game, and your fixed stop loss is the predictable target. The consequences extend far beyond a single losing trade. The psychological toll is immense. After getting stopped out time and time again on what you knew were good trades, a deep sense of frustration and distrust sets in. This leads to what traders call analysis paralysis and loss aversion. You become too scared to enter a trade because you're convinced you'll just get stopped out again, so you miss out on massive moves. Or conversely, you start revenge trading, taking on reckless risk to win back your losses. This emotional roller coaster leads to inconsistent trading performance, a lack of discipline, and ultimately, a self-fulfilling prophecy of failure. You start blaming yourself, your trading system, or the market, when the real culprit might be the very tool you were told was essential for risk management. So, if the conventional wisdom is a trap, what's the advanced, more intelligent alternative? The future of risk management lies in moving beyond the static nature of the stop loss. Professional quantitative funds and savvy traders don't use a single point of failure. They use dynamic systems that can adapt to changing market conditions. Instead of a hard-coded exit, they have a self-correcting mechanism that manages and recovers from temporary drawdowns. This isn't about being reckless. It's about using the market's inherent push and pull to your advantage. This brings us to a revolutionary tool that's changing the game for retail traders: the Auto Recovery Expert Advisor from RobotFX.org. This sophisticated MetaTrader EA completely redefines risk management. When a trade goes against you, it doesn't just panic and close the position. Instead, it intelligently opens a series of smaller, counter-directional trades. This automated system creates a dynamic hedge that systematically reduces the drawdown and recovers the loss, even turning the position into a profitable one. It's a method that is far more resilient to sudden spikes and market noise. The Auto Recovery EA works on both MetaTrader 4 and MetaTrader 5 and can be used on a wide range of currency pairs, meaning it's a versatile solution for any trading strategy. It's the closest thing to a set-it-and-forget-it tool for risk management, freeing you from the stress of watching every pip move and the fear of getting stopped out. The old way of using stop losses is a road that, for many, leads to a slow and painful decline. It's time to empower yourself with a tool that works in harmony with the market, not against it. You can break free from the stop-loss trap and finally give your trading account the consistency and stability it needs to grow. And the best part? A full version of the Auto Recovery EA is available for you to download for free. Don't let your hard-earned trading capital continue to drain away. Visit RobotFX right now to get this incredible MetaTrader EA and start trading with true confidence and a strategy that puts you back in control.